My name's Adam Howard. I'm currently doing Supermarket Wars. Is the oligopoly structure still robust? Part of Assignment 2 for Economics. The oligopoly structure between Woolworths and Coles has been operating traditionally strong for many years, around 70 plus in matter of fact, with the research showing consumer spending in the past accounts for around 40% of every dollar spent by Australian consumers in the retail market. These supermarket giants are dominant within the Australian market, both in presence and size, as well as maintaining the desire for significant growth. The market has certain barriers towards entry, and this has continually enhanced their position of dominance. But through the pandemic and consumers' choice, there is potential and signs of change within the Australian supermarket structure. As per the video clip, the supermarket giants are now confronting more competition and levels of opposition than ever before, with the media promoting supermarket wars. The information given in the video clip shows how the Australian independent grocers are expanding their offerings and growing. For example, Romeo's in South Australia from 27 state-based stores into the 12 interstate stores as shown on the clip. On a bigger scale, German grocery giant Aldi has now over 500 stores across Australia, and new entrants are set to test the Big Two's market share over the next 5 years, according to data and research. Woolworths and Coles in 2021 still dominated the industry with a oligopoly 55% market share, but Aldi 11, IGA 7 and others 17% are all trending upwards with their market share in this sector. When looking at the market structure from 2022 independently from other data, the two dominant players are easily recognisable and still sitting strongly within the structure. Further research and data shows Woolworths and Coles' combined share of market was 65% in 2008, and they have actually, in reality, lost 10% over the past 15 years. When looking at the data, it is triggering concern amongst Woolworths and Coles as they want to continue the market in their own self-benefit way. It was noted within the video report, competition is now applying similar strategies to combat the dominance and structure of the supermarket giants. Many techniques have been and will further tried to maintain barriers to entry and reinforce the dominance. The strategic interaction between the supermarket giants has been in the eye of the Australian consumer and key stakeholders for decades. Woolworths and Coles will continue to maintain barriers, pushing heavy advertising between the giants. Woolworths spending $11.25 million per quarter and Coles spending $8 million per quarter. And data shows this is a huge figure over the last 2 years. The relationship of one action influencing the other is highlighted as both companies are huge advertising investors operating in each other's market. Collusion within game theory has been suggested, with legislation being changed multiple times to try and protect all stakeholders within the oligopoly structure. Looking at the current advertising spend, much profit could have been retained if collusion or relaxation of advertising was obtained between the parties. $72 million could be saved with advertising. Obviously, a total shutdown would have other effects, letting people in, trust between parties, and obviously the illegal factors of collusion. The Australian consumer law protects all stakeholders through legislation and the eye of the ACCC. Coles and Woolworths operate the majority of the time with a kink demand curve model, as when one increases price, demand falls quickly, elastic. But if one player decreases pricing, this can increase market share, but it can quickly turn into a market war also. Pricing stability is important to the supermarket sector, and within the video clip, much was pushed back to feed outs, online shopping and value adds. All players understand, even with pressure, the supermarket wars, the market that they are currently competing in is important to do it with some responsibility. Australia's oligopoly within the supermarket industry is still strong, but there will be pressures around this market, not from just other competitors shown in the video clip, but pressure from customers and suppliers who are concerned by the market share of the major players. A strong example of this was when suppliers had their livelihoods pushed back with the supermarkets forcing $1 a litre milk sale, and it backlashed a lot. Coles and Woolworths will look to keep the market structure the same by using the next best strategy, be it online sales or home brand items, but over time, consuming will the tale of independence and the long-term model players will be stronger in this segment. It was noted in the video clip that sales are lower for Woolworths and Coles supermarkets as we go back to the new normal. What is the new normal? I think data and research points towards more players and a more varied shopping experience. Therefore, short-term, oligopoly retained, long-term, structure breakdown with more players, less robust. References.